Well, April's job report hit an impressive milestone. The unemployment rate fell from 4.1% in March to 3.9% in April. That's actually the lowest level since December 2000. The Labor Department said Friday that employers added 164,000 jobs last month. And although that's fewer than expected, the unemployment rate has been on the decline since 2010. Co-founder and co-CEO of MarketSnacks, Jack Kramer, joins us now to discuss this. Also, great numbers on the jobs report. Shouldn't people be happy all around over this?
Yeah, this is amazing. Since 2010 until today, it's just been an incredibly steady recovery. I think we had 10% unemployment back in 2010, down to 3.9% today. To an extent, we're almost just numb from the news of a new earnings report and a lower unemployment rate. The frustrating part is wage growth just hasn't happened like we expected it to.
And what about wages, too? I mean, it seems like you should be super happy about this, but people are still looking at wages that they haven't risen much, right?
Yeah, so, you've heard that for decades, the average wages for the middle class in America haven't really gone up. But now that unemployment rate is only at 3.9%, you figure managers are going to have to offer people at competitive firms pay raises in order to attract them to come over. But the average wage level right now is only 2.6% higher than the same point last year. And really, that sounds like it's okay, but since the price levels due to inflation are 2.4% higher, people just barely are better off than they were a year before, which is kind of surprising and sort of confounding to economists.
I want to turn now to the Berkshire Hathaway meeting. They call this the Woodstock for capitalists.
Yeah.
We know Warren Buffett will be there, and it's a chance to speak to shareholders. What are you watching for with this and hoping to hear about?
Yeah. Warren Buffett's like the Albus Dumbledore of finance. He's been in the
Never
market
heard that.
forever. He's the ultimate source of wisdom, and he sort of has a grandfatherly presence that comforts everyone. So everyone's gathered around. Berkshire Hathaway announced their earnings this morning, which kind of shockingly fell. That hasn't happened since 2009. But people also just want to hear what his opinion is on the greater market. What's happening with this trade war? How's that going to result? Are profits maxed out, or is there still room to go up? So we're really excited to see kind of the Q&A that typically happens at this event.
You know, he had a really unique take on the Me Too movement, saying that it was a positive economic development. Why does he feel that way?
Yeah, so he gets economics and he also gets women. He has two sisters, and he was bragging that both of them are just as smart as he is and have better personalities than him. But you know what? They didn't have the opportunity that he did to do well in business. So he understands economics. A crucial resource for the American economy is human resources. And if the Me Too movement is going to empower women so that they get the same opportunities in the workplace as men, that's going to mean more innovation, higher performance, and more productivity. So it's a good thing.
We also know that Berkshire Hathaway's bought $75 million worth of shares in Apple. Why did they do that?
Yeah, so there's this big concern that's been around for a few years with Apple on Wall Street. And the question is, how is Apple going to grow anymore? For over a decade, the key driver has been iPhone sales. But for 3 years, they've been flat. So the solution to that problem is services. And I think Warren Buffett gets that. So the benefit that Apple has right now, even though people are replacing their iPhones every 3 years instead of every 2 years from the past, there's 1.3 billion Apple devices in the world right now that are connected to, the iCloud, potentially connected to Apple Music, potentially connected to Apple Pay. And so that's going to be the future growth driver for Apple.
I still don't want to pay $1,000 for an Apple phone. I'm one of those people. I just don't like it, Jack. Yeah. I don't like it. But speaking of Apple, how did they do this week in terms of earnings?
They did really well. So there was concern that the iPhone X's the iPhone X's price tag of $1,000 has been doing really poorly. There's kind of been rumors out there.
So I'm not alone, Jack.
You're not alone. I have the iPhone SE, which my friends think is an iPod 3, but you know what? It does well enough for me. Anyway, they sort of defied those critics. iPhone sales did go up, and they actually set a record for this quarter for Apple's year. But the driver that everyone's focused on is services. So service sales rose 31% to $9 billion in the quarter. That's a really good number, and it means that multiply 9 by 4, that's $36 billion. Their goal is to get to $50 billion sales per year in services by 2020.
Okay, I want to turn now and talk about Tesla. They had that interesting conference call, earnings call with Elon Musk. At one point, he actually turns away from regular media folks and turns to YouTube to take questions. Do you think his stock price has actually dropped nearly 10% the morning after that call? Is he a liability now?
A lot of things were ordinary about this earnings report. There was a huge loss. That's ordinary for Tesla. They missed their goals. That's ordinary. What was extraordinary was his response to a couple of critical questions. Now, Elon Musk is part altruist / world saver, but part egomaniac. Mm-hmm. And some of the questions coming from these analysts attacked both parts of those characters for him. So Elon Musk pointed out in Twitter yesterday that Tesla is the most shorted company in the American markets. That means more people are rooting against Tesla and hoping that shares go down than any other company. So he's frustrated by that, and his baby is being attacked by Wall Street, and so he responded pretty negatively. I think he called questions by a couple of critical analysts boring and just plain old stupid. And Wall Street doesn't like that response. They would rather Elon Musk refute those questions, or have a good answer for them and put him in his place with intellect instead of an insult.
But it's clear he's really smart. He's got great ideas. He thinks way outside the box. So I'm just so surprised that everyone wants to short it. I mean, obviously, I know they're not a mass-producing car company. They never have been. Maybe it's part of the problem. But why do you think everyone's so against him and Tesla at this point?
Yeah, well, it's been 15 years that Tesla was founded in 2003. They've never had an annual profit. So we talk about the success, and it has been amazing. Their cars are spectacular, but there still hasn't been that profit. So 5,000 per week, that's the big number we're looking at for Tesla. If they can produce 5,000 Model 3s, sort of the mainstream car that they're creating now, then they have a chance of profitability. They're not even halfway there yet, and some investors are getting pretty impatient.
All right. It always comes down to the bottom line, doesn't it?
Yeah, it does.
Jack Kramer, thank you so much for joining us and your insights.
Thank you.